All right, the holiday shopping season is officially in the books, and the numbers are finally in. So today, we're going to dive deep into the global diamond market. Think of this as a snapshot taken on Christmas Day 2025. And, what it shows us about the industry? It's a lot more complicated than you might think. So let's start with a number that got everyone's attention, plus 1.6%. What is that? Well, according to MasterCard, that's how much U.S. holiday jewelry spending went up year over year. Now, on the surface, that sounds pretty good, right? A reason to pop the champagne, a sign of a healthy market. But as we're back to see, that one little number is hiding a much, much bigger story. So first things first, let's really unpack that holiday sales report. For retailers, this season is everything. I mean, it can make or break their entire year, and their mood right now kind of sets the tone for all of 2026. And the mood right now, I'd call it cautiously optimistic. Retailers in the US seem pretty happy with the steady sales they saw, but the real story was all about the timing. There was this huge flood of last-minute orders, and because retailers kept their inventories super tight this year, that late surge caused a mad scramble for dealers who actually had diamonds on the ground ready to ship inside the US.
Okay, so spending is up. But what are people actually buying with that money? Let's peel back another layer of the story, because taste and trends are completely reshaping this market. And it's pretty clear that in 2025, it is not just about the size of the diamond, it is all about the shape.
Yeah, we're seeing a massive shift in what people want. For, decades, the round, brilliant diamond was the undisputed king, the classic. But the trend now, especially when you get to stones that are 2 carats or bigger, is all about these elongated or long, fancy shapes. We're talking ovals, emeralds, and marquises. And in those larger sizes, they are actually outselling rounds. And if we drill down even further, it gets super specific. Dealers are all saying the same thing. High-quality marquises, long radiance, and long cushions are just hard to find. They're in legitimate short supply. Same thing goes for those perfectly proportioned, elongated ovals in the really popular D to I color and VS to SI clarity ranges. And the keyword here, you gotta remember, is high quality. Finding these really well-cut fancy shapes is getting tough. And this just shows you how much that specific shape can matter. Look at this, take 2 cushion-cut diamonds. One's a traditional square shape, the other has that trendy long proportion. Just that one difference in its silhouette means that long cushion can pull a staggering 20 to 25% price premium. It's just a perfect example of how what's popular on Instagram is directly hitting the bottom line. But of course, not every fancy shape is hitting a home run. The princess cut, which used to be huge, is still really weak. And really, any stone, doesn't matter if it's fancy or round, if it has bad proportions, the market calls it illiquid. And that's a brutal word. It basically means it's incredibly difficult to sell at any price. Okay, so we've got a pretty good feel for the US market. But the diamond trade is a truly global game. So let's zoom out for a second and do a quick tour of the major trading hubs to see how the vibe changes from place to place. Well, as we've seen, the United States is basically the engine of good news right now. The mood is positive, sales were steady, and demand is really strong for those long ovals we keep talking about. Plus, classic stuff like tennis bracelets and necklaces. Now, you hop over to Antwerp in Belgium, a huge trading center, and the feeling is mixed. They're seeing good business in the really big stones, we're talking 3 carats and up, but there's this growing cloud of concern. They're really worried about lab-grown diamonds and the impact they're having, especially in that strong US market. Then you go to India, another absolute powerhouse in the diamond world, and the market is just sluggish. Gold prices are sky high, and that slammed the brakes on local jewelry sales. And you can draw a direct line from that economic pressure to what's happening next. It's pushing local consumers to shift towards more affordable synthetic diamonds. And to round out our little world tour, both Israel and Hong Kong are being described as stable, but quiet. Not a lot of action. The Israeli trade is laser-focused on trying to get a deal to exempt their diamonds from U.S. tariffs. Meanwhile, Hong Kong is just seeing steady, nothing to write home about demand for nice stones in that 2 to 5 carat sweet spot. Okay, so that's the sentiment. That's what the dealers and retailers are feeling. But feelings, they can be misleading. So now we're going to look under the hood, past the sales numbers, and decode what the raw price data is telling us about the real health of this market. And to do that, you just need to know this one term, the RAPI, which stands for the RapNet Diamond Index. Put it this way, it's the industry's main benchmark for wholesale diamond prices. Just think of it like the S&P 500, but for diamonds. Simple as that.
All right, here it is, the full index at the end of 2025. You can see all the changes weekly, monthly, year to year, and whoa. At first glance, that is a sea of red, a ton of negative numbers, which seems to totally contradict that positive holiday news, right? But the real story isn't just that prices are down, it's where they're down. And this chart, this is the story hidden in all that data. Look at this. It's a tale of two completely different markets. On the left, you've got half-carat diamonds. Their prices have absolutely collapsed by over 25% in 1 year. But then, look at the right. 3-carat diamonds are basically flat. They're down less than a fifth of 1%. This is not one single market, it's two. And this is the absolute heart of the issue. While those big, beautiful, high-quality diamonds are holding their value incredibly well, the smaller, more commercial-grade diamonds, they're facing severe price pressure. And that explains everything. It explains the disconnect between good sales numbers and terrible wholesale prices. The money is being spent, sure, but the value of the smaller diamonds most people buy is in an absolute free fall. So this dramatic split in the market, it sets a pretty wild stage for the year ahead. As we close the books on 2025, what are the key trends and, the big regulations that are going to shape the diamond world in 2026? The industry has its eyes on three things. Kicking off January 1st, new rules in the EU will require a statement proving diamonds of a half carat or more are not from Russia. Later in the year, India takes over as chair of the Kimberley process, the group that governs ethical sourcing. And, like we said, Israel is still pushing hard for that crucial U.S. tariff deal. Geopolitics and regulation, they're clearly front and center. So let's pull this all together. What's the takeaway from this whole snapshot? First, it's a market of crazy contrasts. You've got strong U.S. sales on one hand and collapsing prices for small stones on the other. Second, quality and shape are everything now. The right long fancy shape can get to a huge premium. Third, global pressures, from lab-grown synthetics to new regulations, are becoming a massive deal. And finally, the most important point, it is a split market. Big, beautiful stones are stable, while the smaller stuff is falling fast. And that really leads us to one final and kind of provocative question. For decades, this entire industry was built on a single promise, that a diamond is forever. A timeless, valuable treasure. But with the prices for the very diamonds that most normal people can actually afford falling so dramatically, you have to ask, is that promise starting to fade? And that's a question the entire industry is going to have to face in 2026.